So arbitrages occurs where there is a lack of, there's information asymmetry, so much so that some people have more information than others about asset prices and information about assets, so much so that one party can take advantage and make risk-free profit. So basically, if I had information about something, I could buy in a particular location and sell in another location, and without incurring risk, get a higher price. I can sell at a higher price. That's what arbitrage essentially means. So it also implies that in an efficient market, assets will be fairly valued, and so there will be no under or over valuation of assets. And in the final gist, we said that essentially in an efficient market, the intrinsic value of an asset will be equal to that asset's price. And the intrinsic value is the true value of an asset. So a value reflecting the value reflecting what that asset is providing in terms of benefit. That's the true value. So when we measure using like our valuation models now, what we are calculating is the intrinsic value. The market price will now be a reflection of the market or the general market's perception about that asset, which might be either higher or lower than its intrinsic value.
기자들 불러서 입맞춰 주겠다고 싫다며. 그럼 저것도 관심 있고. 나 예쁘니까 잘 봐주세요. 나도 해야 될 거 아니야. 와, 무섭다.
Okay. Can everybody hear me?
Yeah.
Okay. So is the definition and explanation clear?
You go.
No, not really. We're just discussing efficient market hypothesis, or we're discussing efficient market. We have not started most of what we need to do today. Okay, so now efficient market hypothesis. Efficient market hypothesis is 3 hypotheses. So the proponents of EMH.
I'm not putting on my own.
Identify 3 types of efficient markets. So the first one is the weak form. So we have the weak form efficient market. The second one is the semi-strong form. And then the is the strong form. So now, in the weak form, we can define the three of them or discuss them, describe them. So we'll look at the weak form. So in the weak form efficient market, asset prices reflect all past information about that asset. So all past information is reflected in the asset price. Now this implies that no financial market participant can constantly outperform the market by having access to past information. And we can say that essentially means by carrying out technical analysis. Now, if we
What's
think,
FM?
you said what?
What's FMP?
Financial market participants.
Okay.
So an investor, a trader, anybody that is engaged with transactions in the financial market is a financial market participant. So with weak form efficiency, all past information is reflected in the price of the asset. And there's no means of constantly outperforming the market by having access to past information. So the asset price will reflect all past information. We said technical analysis. If you think about it, technical analysis is the kind of graphings that are done, chartings, all those kind of things. So it's basically using past information. So we can draw a graph like this and say maybe this was the assets price in say 20 or 1999. So in 1999, this was the assets price. This was the assets price in say 2005. This was the assets price in 2011. This was the assets price in 2016. And maybe we have the assets price in 2019. So with financial analysis, maybe we can plot that. So maybe the assets price was here, here, maybe here, here, and here. These are those charts you see on things like Bloomberg, and the rest of them. They will now make it finer, but if you get the point, this is basically it. So let's assume that these are the assets prices. Now what we can do is to, if we are charting, or we are carrying out technical analysis, then we can chart and maybe do this, and we have this kind of information. So we can say that if we want to, for example, plot what the assets price is going to be in 2030, then we can take this line that we already have and extrapolate and say that in 2030, the price of the asset will be somewhere here. So we can, let's assume that we are plotting price against time. So assets price then time measured in years. And you will notice that this kind of graphs will usually not start from the origin because the assets price was not zero in 1999. So maybe the assets price was somewhere here and we have our value here, and we can use that kind of information to extrapolate to get a value in the future. This is what technical analysis is. Is this clear to everybody? Please, I want to know so that I would know whether I'm even... Please, can you hear me? Nebi? Nebi? If nobody answers me, I would think that I've gone...
I can hear you. We can hear you.
So what do you use this technical analysis to do now?
Exactly what I've just shown you. If I know what the price is in 2019, and the market is not a weak form market, if the market is an inefficient market, then in an inefficient market, I can look at past prices and be able to extrapolate to get what the future price of an asset will be based on my historical information. So what we are saying is that in a weak form efficient market, you cannot use this past information to extrapolate to get what a futures price, the future price of an asset will be. So the idea is, if we will, we can look at this in terms of the discussion about so the idea is that efficient market follows a random walk, so much so that you cannot have the random walk theory basically states that the assets price will follow a random path. You cannot plot what an assets price will be. What will determine an assets price are information that nobody has monopoly of. Do you get the point I'm making, madam?
No, sorry, please come again. You say random walk?
The random walk theory is basically that an assets price would follow a random path, will follow a random walk. So you cannot predict an assets price with any level of certainty. So what the price will be tomorrow will be dependent on information available tomorrow. So you can't use the past information to say, I want to plot what the price of an asset will be in an efficient market, even a weak form efficient market. So we're saying in a weak form efficient market, you can't use past information to be able to predict the future. So the assets price will follow a random walk is what we mean in essence. Do you get the point?
Yeah, I got it. Thank you.
All right. Okay, so we can move to the second. So we can go to the second one now. So we'll look at the semi-strong form now. And the semi-strong form, I like the way someone put that in, that the efficient markets are like concentric cycles. So he said that, he gave an analogy that it's like an onion. If it is rotten in the core, if it is rotten outside, then it's rotten in the core. So the various markets build on each other. So if the weak form, if a market is weak form inefficient, it means it is strong form inefficient, and essentially strong form inefficient. So if you don't meet the criteria for weak form, it's not possible for you to meet the criteria for strong form or for or semi-strong form. And so let's see the definition of this now. So we said the strong form efficient, in a strong form efficient market, asset prices reflect all past and presently publicly available information. And we can continue the way we've defined the other one. So therefore, no financial market participant can continually.
Not in your screen.
Ryan, please change it back to these.
Oh, okay, sorry.
What document?
Yeah, it's fine. I get. Okay, so now with the semi-strong form, we said that the asset price reflects all past and presently publicly available information. Therefore, no financial market participant can continually outperform the market by access to past or public data. So, such as the company's current financial statements, analysis, by financial analysts, reports by independent third parties, about the company. These are examples of presently publicly available information. So in essence, no FMP. So it means that, okay, yeah, would outperform the market by using fundamental analysis. So the first one was technical analysis. The second one is fundamental analysis. So fundamental analysis is what we are doing now. Actually, what we are doing is fundamental analysis. Uses company information, such as earnings and other fundamentals, so cash flows, so this kind of company fundamentals to value an asset. Is there any question here?
I'm okay.
Brian,
Okay.
is that third party? Independent
Third parties, yes. Independent third parties. Okay, third. Okay, so we'll move to the last one. The strong form efficient market. So that all past, publicly available and insider information about a company or asset are reflected in the share or assets price. Therefore, no FMP can outperform the market. Full stop. There's no kind of information you can have, because that information you have, every other person has it. That's the idea. So if we go back to our original discussion, we said in an efficient market, information is available to everybody. So if in a strong, efficient market, we are saying that even insider information is that information that should be known by only corporate insiders, only the directors of the company, the senior management of the company, the board, those kind of people would have access, so that when they're having a meeting in the boardroom, the information in that boardroom is already available to all financial market participants. So we'll see that there has been no substantive case in the world of the existence of a strong form market. These are just theoretical. Weak form market is available, semi-strong form is available. Many parts of the developed world, the US, UK, Europe generally exhibit some levels of semi-strong and weak form efficiency. But there's no practical human example of a strong form efficient market where no matter who you are, whether you're the wife of the director or the son of the chairman, it doesn't make any difference, or a carpenter or a bricklayer, as long as you're involved with the market, you will have the same access to information. That's just a theoretical discussion and something that is seemingly not practicable. Do we get the point?
Like a perfect market.
You said what?
Like a market has the whole information.
Yes.
Remember.
To anybody.
To anybody.
So no matter how highly connected or how lowly connected you are in a strong form, efficient market, it will not matter, because everybody has access to information. So it means that things, if we continue extending this thought, it means like our theories like Modigliani and Miller, and arguing that I like how related market efficiency is to the concept that we used in in Modigliani and Miller when we are talking about perfect capital market. But market efficiency deals with information availability, information dissemination, how symmetric is information. So that's basically the argument for efficient market. Is there any question? Lillian, don't sleep. Oh. Okay, so your own is okay. Please don't hide your face so that we'll know when you're sleeping. Because the way you're sitting down now. I'm sure Nebi has slept. Okay, so let's look at our question for the day. We said Avem Koabi.
Yes.
Okay, so Can someone please read the question from requirement? So I will not finish this one at 11 today. In our usual way.
Brian, we're fasting.
Who is that? Who is fasting?
Halima now.
Oh yeah, that's true, Alima. Okay, it's true. I know. I'm conscious of it. We'll try and finish early. That's why I had other plans. I don't know. First of all, network did not make me happy at all. But yes, I'm completely conscious of it. We have discussed this earlier, so we know when. Hey, wait. We also talked about the timing. Okay. Let's just look at the question and see what we can do. Okay, so who's reading?
Brian,
Yes. You said what? I didn't hear you. The line was breaking. Can you hear me? I didn't hear what you said.
What question?
Okay, Avemco.
What question?
Avemco.
What question?
Avemco.
I said what?
Avemco. Okay, I think this thing is looping back, so please don't worry. It's delaying before you hear me. So don't answer with aggression. When you finally hear it's Avemco, I think they say it was number 51 in the new revision kit. In the old one, in my own, is number 68. So it's somewhere between 51 and 68, depending on how old you are. Okay, so let's read our question. Okay, so read now. Nebi.
Hello?
Yeah, Nebi, I can hear you.
I've seen it. Thank you. What did you say I should read?
Yes, but your voice is doing like it is drinking.
Not so good, to be honest.
You said what?
My network is not good. I can't read.
Okay, it's true. Your network is bad. We are hearing your voice like you are waking up from sleep. Okay, so someone with strong network, read for us now. Chinedu Alpha, we have never heard your voice in this class.
I joined late.
So?
Please. Give me the introduction of the Avemco. Let me read it.
Introduction, okay.
Like, I want to be sure that was what I'm seeing here. 59.
Don't worry, it's the same question. Just read from required. Discuss whether or not Nahara Co is the same question.
Okay.
It won't change.
Okay, same question.
It won't change. It's not even amended. So it's exactly the same original. If you check your book, if it were amended, they will write 2000 as in 1214 amended. But the Avemco is just 1214 directly there now, Abi.
Okay.
I'm talking for the new books. Anybody that has the 2000 and the current book, the white book, there's no amended on the question, Abi. Is anybody there?
There's no amended here. Yes, no amended on it.
Okay, so that means that the question is no matter how old your question is, it will be the same exact question to not be touched at all. Okay, so go ahead.
Let me give you the required. discuss whether or not Naharaco's acquisition strategies of pursuing risk diversification and of purchasing undervalued companies can be valid. Did you get it?
Yeah, that's the same thing. Yes, you're right. Yeah.
Then B question. Discuss why the European Union may be concerned about Naharaco's stated intention and how selling Fugaco would reduce concern.
Okay.
Then C. Prepare a report for the board of directors of Avemco, which 1. Estimates the additional value created for Avemco if it acquires Fugaco without considering the luxury transport project. 2. Estimates the additional value of the luxury transport project to Fugaco, both with and without the offer from Lumico. And 3. Evaluate the benefits attributable to Avemco and Fugaco from combining the two companies with and without the project, and conclude whether or not the acquisition is beneficial. The evaluation should include any assumptions made.
Okay.
Professional marks will be awarded in Part C for the format, structure, and presentation of the report.
So as always, when preparing a report, we'll have to prepare it in report format. And once we've done that and put the things the way they should be, like we have seen, well, like we saw earlier on, we should be in a good place to get our marks. Now, the requirements, first of all, they said to discuss whether or not ENCO's acquisition strategies of pursuing risk diversification. Okay, this thing will soon log us out. So once it logs us off, we'll come back and continue the question. So it says we should discuss whether or not ENCO's acquisition